If you're following India's massive IT sector, you're probably hearing some pretty confusing things right now. On one hand, you've got analysts talking about a huge boom just around the corner. But on the other hand, you hear about regulatory shocks and, well, a new almost existential threat. So, what is actually going on?
Okay, let's just dive right into this paradox because the answer really is yes to both. The industry is being pulled in three totally different directions at the exact same time. You've got a powerful economic tailwind pushing it forward, a big regulatory headwind slowing it down, and a technological tsunami that could change everything. And to really get what's at stake here, you first have to appreciate the sheer scale of this industry. We're not talking about some small niche market. This is an absolute giant of the Indian economy, and it is staring down a truly pivotal moment. $250 billion. That's a quarter of a trillion. Now, this massive industry has been in a bit of a slump lately, but a powerful economic tailwind has analysts feeling optimistic for the first time in a good while. Funny enough, this wave of optimism didn't start in Mumbai or Bengaluru. It actually started in Washington, D.C. In late 2024, the U.S. Federal Reserve did something that sent this massive positive ripple all the way across the globe to India. So, what does a U.S. rate cut have to do with Indian IT? Well, everything. Think of it like a domino effect. When interest rates go down in the US, it suddenly becomes cheaper for American companies to borrow money and to invest in new projects. And that unlocks a ton of spending from the IT sector's biggest clients, especially in the world of finance. And the impact is expected to be pretty dramatic. The BFSI sector, that's banking, financial services, and insurance, is projected to swing from negative growth all the way to a stunning 6 to 7% growth. Why? It's because for the first time in a while, big banks and financial firms can finally pull the trigger on what's called discretionary tech spending. These are the important upgrades and projects they had to put on hold when money was tight. So the bottom line is, the economic forecast is suddenly looking really bright. As this report from BNP Paribas points out, the outlook for capital expenditure, basically spending on big projects, is revving up the whole engine. But just as the market started celebrating this tailwind, a huge regulatory storm cloud appeared on the horizon. All right, so let's shift gears and talk about that headwind. This is a sharp, really costly change to the H-1B visa program. Now, this is a program the Indian IT services model has relied on for decades to place its skilled workers on site with clients in the US. And this is not some minor tweak. The US government announced a brand new one-time fee of $100,000 for every single new H-1B application. That's a massive cost increase that hits the bottom line, plain and simple. And this chart just lays out the potential damage perfectly. In a worst-case scenario, you're looking at a significant hit to earnings. For giants like TCS, it's a couple of percentage points. But for a company like Burlesoft, you're talking about a staggering 14% hit. That's a huge deal. But here's where the story gets a little more complex. Take a look at this chart. You can see a very clear downward trend in H-1B applications. They've fallen by more than half since 2017. See, this isn't happening in a vacuum. The industry has actually been preparing for something like this, actively reducing how much it depends on these visas by hiring more local talent in the US. Some firms are now saying over 70% of their US staff are visa independent. Okay. But while the market is busy debating these familiar forces, economics versus regulation, there is a technological tsunami forming just offshore. And this is something that could completely reshape the entire industry in a way that rate cuts or visa fees just can't. To really get this threat, you have to understand a fundamental shift in what AI is becoming. For the last few years, we've all gotten used to AI as an assistant, right? A tool that makes a human worker faster or more efficient. But the tech is crossing a new threshold. It's becoming an autonomous worker that doesn't just assist you, it does the task for you. On this concept, it stopped being theoretical and became terrifyingly real with the launch of a platform called Claude Cowork from the AI company Anthropic. It is literally designed to be a digital employee, and the second investors understood what that meant, well, shockwaves just ripped through the stock market. Because we're not talking about helping you write emails faster. This AI worker can perform the exact kind of skilled, knowledge-based tasks that companies have been outsourcing for decades. We're talking about entry-level coding, data analysis, reviewing legal documents, reconciling financial accounts, all done autonomously by the AI. The market's reaction was immediate, and it was brutal. On February 4th, 2026, about 24 billion US dollars, that's nearly 2 lakh crore rupees, was just wiped off the value of India's IT stocks in one day. This was pure, unadulterated fear about what this technology means for the future of the industry. And that fear, it all centers on one critical question, a question that challenges the absolute foundation of the Indian IT industry's business model. A model that, by the way, has been fantastically successful for more than 30 years.
You see, the entire $250 billion industry was built on a very simple premise. You deploy large teams of skilled engineers, and you bill your clients for their time. The billable hour is the fundamental unit of money. But what happens if an AI worker can do those tasks by itself in a fraction of the time? Why would a client pay for a team of 10 coders when an AI can just do the job? So this right here is the crossroads where India's IT sector stands today. It is a race between a powerful economic tailwind pushing it forward, a regulatory headwind trying to slow it down, and a technological tsunami that is threatening to wash away the very ground it stands on. The real question isn't just about navigating the next few months. It's about whether this entire massive industry can reinvent itself before the nature of work itself is reinvented for it.